Welcome to the video on the provision for doubtful debts. So today we're going to look at what's called the provision, or sometimes the allowance, for doubtful debts, and this follows on from our video on debtors circularizations. So if you haven't seen that one, that might be worth going and having a look at first. So we have an inherent risk. There is an inherent risk that anybody that you sell goods to on accounts receivable will not pay. And so because we have the conservatism principle of accounting, conservatism means we need to take into account the fact that some people will not pay. So as a result, we have a provision or a contingency or an allowance in place against the asset of accounts receivable. Now, how exactly do I figure out how much should be in my provision for doubtful debts? Well, I know that I need to follow AASB 139 or FRS 139 if you're following International Financial Reporting Standards. And so AASB and FRS 139 say that we need to consider the fact that some of these amounts owed by creditors might not be collectible. So let's have a look at what I see here. So what I see here is something that we call an aging schedule. So an aging schedule is simply our accounts receivable balance stratified. So remember, go back and have a look at ASA 530 or ISA 530 for information on sampling. But stratification means that I simply take my balance or my entire accounts receivable and I break it up into smaller segments so that I can investigate those more thoroughly. So our total balance of accounts receivable is actually $785,000. All right, so that's total accounts receivable. And what we've done is we've taken that 785,000 and we've broken it into 4 commonly used strata. 0 to 30 days, because most of the time, most credit terms are some discount. So let's say 2% discount paid within 30 days. Otherwise, paid within 10 days. Otherwise, 30 days. Oops, sorry, you can't see that. Let me put it here. So 2% discount if paid within 10 days, otherwise payment within 30 days. That's an example of the payment terms. So 30 days, these are the people that are likely to pay, and the company estimates that 3% there is going to be uncollectible. As you go 1 month out, so these are 1 month overdue, then some people might just be a little bit late to pay. So 6% the company is estimated as uncollectible. Here is where it gets trickier. So this is 2 months overdue, and they think that 15% of the 100,000 might not be collectible. And then 90 days overdue. So these are 3 or more months overdue. Now for these particular items, the question becomes, how do I figure out which of these is more likely to go unpaid? Common sense and logic tells us that for items older than 90 days, the likelihood of receiving those funds, according to management's estimate, is about 50%. So therefore, of the 25,000 that's owed, we think potentially we might not be able to collect 12,500. So what do I do in terms of testing here? Because I need to determine how much is a bad debt expense compared to how much is going to be in my allowance or provision for doubtful debts. So we need to figure out what's the difference between the bad debt expense and the allowance. The bad debt expense are those that we think are definitely uncollectible. Definitely not collectible. And then my allowance for doubtful debts are ones where there is a possibility it's not collectible. And then according to AASB 139, where we have items that might not be collectible, we need to impair the asset. That is, take some money out and put the value of accounts receivable at its fair value. So how do I figure out what's definitely not collectible? Well, items that are definitely not collectible are going to be companies that perhaps have gone bankrupt or have been liquidated, and the liquidator has told us that it's going to be impossible for us to retrieve our funds. Those where there's a possibility of it not being collectible. Now here they use a certain percentage, but the impairment test requires us to, let me just move this up a little bit. Individually assess and investigate accounts receivable at risk. All right, so that means I need to go through and pick some customers to determine which of those need to be investigated. So out of these, which ones do you think are most likely that I need to investigate for bad debt expense or allowance? Well, certainly here, my customers in my 90 days and more. So what sort of information am I going to collect? I'm going to look for, so let me write this here. So the sorts of evidence I'm looking for, it's not a very bright pen, let me swap to a different one. Let's see if this is a little bit better. So the sorts of evidence I'm going to be looking for is things like letters and other communication. Okay, so I want to see if there has been any communication between the client and the customer. We might need to see if they've contacted a debt collection agency at all. Oh, this is not a very good pen either. All right, to see exactly how long the debt has been unpaid for. So we need to certainly look here, and then with management, we need to look at management's assessment of which of these are collectible and which is not. So in my practical experience, a lot of things that are in 3 months or over are more likely to be bad debt expense. Things that are in my 60 to 90 days, now it says here that the management estimate that 15% is uncollectible. I'd need to evaluate whether that estimate is appropriate, because remember, I also need to follow, as well as making sure that I follow AASB 139, I also need to look at ASA 540. So ASA 540 says when we audit estimates or allowances, we need to look at the mathematical accuracy of what the client's done and then investigate whether the assumptions that the client has used about percentages of uncollectability are appropriate. So I'd need to look at, in the past, for goods that are, or for accounts receivable that are 60 to 90 days over, do we collect about 85% and 15% get written off as bad debt expense? We need to look at those individual customers there to determine which ones are likely to pay. And so again, I can do that by looking at communications. I can look at any legal proceedings, because if you have customers that are under administration or in receivership, then the chances of us being able to collect those funds increases the chances of us being able to collect them decreases and the percentage uncollectible increases. So while sometimes you might see estimates of percentage uncollectible, under AASB and FRS 139, we have to individually impair and individually investigate those accounts receivable. Once we have a list of those customers and the percentage uncollectible, add those up to get our allowance for doubtful debts. So now, of course, all of this evidence is relating to the balance of accounts receivable. So remember, we're looking at our assertions of valuation. All right, so impairment is all about valuation. Obviously, I'd need to also make sure that I've checked that these customers really do exist, which is our existence assertion, and that I have a right to recognize the accounts receivable. And of course, also the completeness assertion applies. But remember, clients are more likely to overstate rather than understate our accounts receivable, which makes the existence and the valuation assertions the ones that are of greater risk of misstatement here. So I hope you enjoyed our video on auditing the provisions for doubtful debts. If you haven't seen our videos on sampling or on auditing accounts receivable, please make sure and check those out. Have a great day.